Hi, I'm Christina 𝐂𝐨𝐧𝐭𝐚𝐜𝐭. I am your certified reverse mortgage professional. There's only about 200 of us in the country. So if you're doing a reverse mortgage, you want to work with a certified reverse mortgage professional. We have a high level of education, experience, and we sign an oath of ethics. Now, today, this video is going to go over the idea of waiting to do your reverse mortgage. Is it better to wait? It's a very common misconception I hear out there where, oh, I'll just wait and I'll do my reverse mortgage when I'm older. And where this comes from is that because as you get a little bit older, each age gets like 1% or a little less than 1% larger in loan amount. So, in effect, a 62-year-old can't get as much as a 72-year-old who has a lower loan amount than a 83-year-old who has a lower loan amount than a 93-year-old. So people often think, well, if the 93-year-old gets the largest loan amount, then I'm going to wait till I'm 93. Not a great strategy for a lot of reasons. I'm going to go into the actual numbers as to why, and a couple of reasons just off the bat why it's not great aside from the numbers. Number one, the program changes. I've had that happen where a client calls back years later and the program has changed. Now the loan amounts are very different. They change what we call PLFs kind of regularly. And so what you can qualify for today is not a given for what you may qualify for in 10 years or even 2 years. Another reason is that it's easier to qualify and a much smoother experience for you, and it makes the loan possible in some cases if you do this while you still have income and good credit. Sometimes people will wait until they have really low income and already have some credit damage. And in the worst cases, we can't get the loan done. In the easier cases, it's just a really rough process to get it done. It can be done. Don't let that dissuade you. If you are in that situation, work with somebody who knows what they're doing and you'll have the best shot at getting through. But if you're in the situation where your income is still great, your credit is still great, put this thing in place. Let me show you why. So we're going to go over a couple of examples. Now, our example is on my client, Diane. I've changed the names for privacy purposes. But Diane is 72 years old, and she's getting a reverse mortgage today. And what we're going to do, let me go over to it. My screen's over here. Sorry, guys. She has a $600,000 home with a $100,000 mortgage on it currently. So we're going to pay off that $100,000 mortgage, make her mortgage payments optional. Diane doesn't plan on making payments, but if she wanted to, she could pay off $15,000 in credit card debt, get that payment out of the way for her, and then leave the rest on a line of credit so that it can be a safety net. She can use it in the future. Now, that line of credit will grow. It's a beautiful thing. I want to show you, though, Diane's going to get a good loan, but what if she hadn't waited till age 72? What if she had done this loan at age 62? What would that loan look like for her today? Let's take a look. If you are interested in my full presentation going over all of the numbers in depth, there are other videos on my YouTube channel. I highly recommend that you check them out. One is called A Winning HECM Strategy. Another is Why Would You Do a Reverse on a Free and Clear House? And there's another with the Line of Credit Growth. Go check out those videos. They are very powerful in explaining everything to you. Today, I'm just going to go over this one specific detail. Doing a reverse 10 years ago for Diane or doing a reverse today. What that looks like in her line of credit. So this is today. This is Diane's loan today. She is paying off the existing mortgage, $100,000. We're going to get cash of $15,000 to pay off other credit card debt and leave a line of credit of $87,000. Oh, but wait, hold on. FHA has a rule where you can't use all of your proceeds within the first year. So Diane, who's thinking, oh, I'm going to get $87,000 in my line of credit, maybe I'll remodel the kitchen, maybe I'll buy a new car, fix the roof, whatever she needs to do. It's her money. She can do whatever she wants with it. But she's thinking she has access to $87,000 right now. She doesn't. Unfortunately, she only has access to $7,000. The $80,000 that's left will become available to her after year one. So now Diane's, oh, bummer. I wish I had access to all that money now. I didn't realize there was this like catch in the way the loan proceeds work. So what if instead of doing the loan at age 72 today, Diane had done the loan at age 62? Now, I can't model the numbers from 10 years ago at 10 years ago interest rates. So these are a little bit not fully accurate, but I want to show you the concept. The concept is accurate. So this is Diane's loan today. Let's take a look if Diane had done the loan 10 years ago. So what I did here is I put her age at age 62, and now we're looking at the line of credit 10 years later at age 72. Her line of credit at age 72, had she put this loan in place at age 62, would be around 110,000. Now these are dependent on some variables, right? Interest rates change, property values change, ages go up. Obviously, we've got that one covered. But that is a big difference, right? Today at 72, she has access to 7,000 in her line of credit. And by 73, she'll have the additional 80,000 for a total of 87,000. But had she put this in place when she was 62 and just not touch the line of credit, let it grow, it would be 110,000 and she could access that right now. It's 3 to 5 business days to get the money when you request line of credit cash. So Diane might have been in a much better situation had she put this in place when she was age 62 and just let that line of credit grow. Now she's got to maneuver some things. She thought she had the cash available. It's not available. So this is a really good reason to not wait to do your reverse mortgage. Another reason is that things change, right? Property values change, interest rates change, the program itself changes. I've had that happen in my career where clients called back and said, okay, we're ready to do our reverse mortgage now. And the program itself had changed. And I had to say, I'm so sorry, the numbers you were looking at a year ago no longer are what they are today. They're very, very different. And at that point in time, they had actually decreased loan amounts. So it was a bummer to have to tell them, you don't get as much money as you once would, even though you waited to be a year older. I hate having that conversation. So I thought I would bring it to you guys today so I could have less of them so that you guys are the educated people who get to make this decision, what's right for you, with fully understanding all the ins and outs of it. If you like the value that you get here, please subscribe. I am increasing my subscriptions and I so appreciate every single subscriber. If you found value in this video too, send it on to somebody important in your life so they can understand this stuff too. Thank you and have a good day.